What's up, everybody? Hello, hello, good afternoon, hola. Good to see everyone. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure here is pretty much unchanged. I had that WISA when I was starting the meeting yesterday, but I'd never kept it overnight, so it's not on there anymore. But everything else is the same as it was. All right, we got earnings. We got earnings reports. We got Netflix here down 4% or so after hours. I haven't actually had a moment to look at any of the numbers, so let me scroll up here and have a look. So we got Netflix. EPS looks like a nice beat, $5.28 versus estimates of $4.52. Revenue is a nice beat, $9.37 billion versus $9.26 billion. Streaming paid memberships is a beat. That's an important one. Streaming paid net change, it's a beat. It's an important one. Another beat. All right, what's hitting the stock down? Guidance. They see second quarter EPS $4.68 versus estimates of $4.54. Okay, and second quarter revenue. Here's the miss. It's barely a miss. $9.49 billion versus estimates of $9.51 billion. Why is the stock down? See, fiscal, they beat on operating margin guidance as well, if I'm reading that correctly from Pat. I have no idea why the stock is down on that number. I mean, you have a very small miss on second quarter revenue estimates. This is actually an interesting report if they're selling it off on what seems to be a really good report. Because if they're beating on margin estimates, EPS guidance, very small miss on rev guidance, but really solid beat on these membership changes, and they're selling the stock down on that, that could be very telling for some of these stocks that have been high flying into earnings reports. This is probably the first major company. I don't really count the banks. The banks I feel like are a tease in the beginning of our earnings season. To me, this seems like the first major company to really report here that's been a high flyer into its report, one of these leading big cap tech stocks. And you always wonder, I've seen this happen so many times over the course of my trading career, where if there's been really good big bullish movements into earnings reports and then they report a good report, which to me this seems like a good report, but maybe not a knock your socks off report, that the stock either can't go up on it or they sell it down a little bit. So right now Netflix is down 3%. It's down $16. I think that the estimated move was like $50 on this thing. So it's not doing anywhere near that. So really interesting to see Netflix reporting okay numbers but not trading well on it. Will that be telling for the other big cap tech companies as they report that if you're not here to knock our socks off, then we don't want anything to do with you? ISRG reported. ISRG. Yeah, no real movement in this thing here after hours. Looks like a beat. I'm not seeing guidance. Looks like a beat on EPS and beat on revenue. PPG doesn't really matter that much. What are they doing? They're not really doing anything either. PPG looks like it's pretty in line. Small miss on rev. How's the guidance look? Guidance is a miss. I don't think that this would be down a little bit on those numbers. Yes, that's where we're at. That's where we're at. Netflix getting hit on decent report. So yeah, again, this could be very telling. Let's see where it ends up, where the dust settles, because as I'm chatting with you guys, it's bounced back a little bit. I mean, down 2% after hours, but certainly not ripping higher either. But let's let the dust settle on that one. All right, so let's jump into the normal part of our afternoon meeting. SPYs here look like they caught like a 25 cent bounce since the market closed. Maybe I don't know. You wouldn't think that Netflix would be helping with that, but like 20-25 cents bounce since the market closed. Even with that little bounce, the SPYs are down about 0.2% on the day. The Qs are pretty much flat from where we closed, and they're down 0.6% on the day. And the IWM is pretty much flat-ish on its day, down 0.1% or so. So the market continued down today. It is a red day, but it wasn't like a momentum red day. It just seemed like we kind of stalled out a little bit with our selling, but yet there was still plenty of selling pressure out there that is not enabling us to rally. And we understand where some of the selling pressure is coming from. We know that over the course of this week, CTAs are sellers in any tape. So there is an inherent offer on this market that is going to create some consistent overhead supply. We understand that is just going to be there naturally as the CTAs are forced to sell in a little bit of a way. Again, pretty much any tape. So that's impacting things, and I would assume that with the VIX just continuing to hold into this $18 range, that there is also a bit of a constant supply from the vol control world a little bit this morning also, a little bit throughout the day today as well, I should say. So at the end of the day, we're in this market that's been very heavy. Obviously, gap ups have been sold, rallies have been sold. There's no indication that that's going to change. The selling has been very orderly. There's nothing in here that looks like it's capitulatory action. And because that selling has been relatively orderly, we haven't been able to have this market get anywhere closer to like more major downside extension where we can really feel confident coming in on the other side of the market. We once again had a gap up this morning, and we once again obviously had that gap up get sold. Got sold in the beginning of the day, and then kind of sloppy price action. We were looking okay into this rally at 11:30 before we totally failed and faded back down. So what we described in the morning meeting today is that the market was kind of trading in no man's land a little bit. It's like we're below our major support levels unless we can really get above and hold above 503. You've got $5 of extension from when I was doing the morning meeting this morning. So $5 of extension is really difficult because you're in a weak market. So it's difficult to buy in a weak market unless you're really extended and you're kind of getting capitulation and you can feel a little bit more confident with the balance. But $5 of extension from the ADMA is absolutely not that. Yet, if you're trying to short that gap up this morning, it's not so big of a gap that you can feel really confident hammering to the short side. Maybe for like a little day trade, versus like an opening high or something like that, you could short versus. But if you're being a little bit bigger picture than that, when you have $5 of extension, what does that mean? It means that the market can easily bounce back an additional $5 and still be bearish, which I would almost prefer one of two things to happen. Either let's stop gapping up and let's get us a nice nasty gap down that can get us to that more extreme extension where we can be more confident to come in and buy for an oversold bounce. Or let's do the opposite. Let's get this market to rally a little bit. Let's get this market to have a bigger gap up and then rally a little bit to get us a little bit closer to the ADMA on the daily chart where we can feel a little bit more confident looking for short setups in the market, knowing that you're not shorting a market that is, moderately extended to the downside, which inherently reduces your risk reward and probability of success. So that's what I would love to see, big picture, but the market hasn't been giving it to us. It doesn't mean that we can't look for opportunities on the small time frame. And that's kind of what I was saying in the beginning of the day today was like, let's see how the market handles the gap in the beginning of the day. If we gap up and consolidate and break higher, it could be a potential long. If we gap up and consolidate, similar to yesterday, gap up and consolidate, but then the lows of that consolidation break, that could be a short setup. And honestly, the price action from a market perspective was kind of tricky this morning because they did sell that small gap up right off the open, but it was a small gap up. It wasn't really done in a way where you could feel very confident executing. You could have shorted versus the opening high for like a little day trade, but it's a tough trade because as soon as you get into those moving averages or as soon as you get into the gap fill, there's a real chance that they bounce that market back and break to highs just because of, again, I'm a big believer in big picture down a small picture. So knowing that that big picture still is that $5 of extension, if you're trying to take that short off the open, you could get maybe a quick little move and then very easily have new highs come in and stop you out. And that's kind of what happened. We had a decent overshoot to the downside. We more than filled the gap. But then we got this nice inside 5 and up here back through 500, which was actually a decent, not great, long opportunity to be involved in this bounce. And then I actually thought things were looking really good here in this move between 10 and 11. I thought that the market at that time was indicating that it could potentially get back above 503, and if it could get back above 503, that maybe we would see more of that bigger upside price correction that I'm talking about. So I was pretty encouraged by this price action here for this hour and a half or so. I did note at about 11 o'clock when I was getting off the radio, it's a pretty big move. We got some extension on the 15-minute chart, and it's also into SPY 503. So I felt that we needed, even if we were going to go higher, to get some sort of price or time correction, especially more like a 15-minute chart. We did get that. We got this pullback here to 11:50 noon. I don't hate the idea at all of looking for like a higher low in here on the 15-minute chart as a trade, but then that failed. I think one of the Fed members was speaking at that time as well and was making some commentary that certainly wasn't helping. I think that might be part of this upside tail that you see here that happened real quick at noon, quick upside tail failure. And then once this low broke though at 11:50, then it was like, all right, this isn't just like a price time correction on the 15-minute chart that can create a pivot low and work our way higher. This is looking more like a failure. So for me, I was pretty encouraged with this price action between 10 and 11. Yet once this like 12:05 bar broke down here a little bit, and we broke the potential pivot low at like 11:50. For me, then it just became a much more hands-off market again, where it was like, all right, maybe we consolidate, or maybe we're just straight up weak and we work our way lower. And the latter is what happened. So from a market perspective, these bulls just can't seem to come in and muster anything. We know that from a market dynamic perspective that there is some consistent degree of overhead supply that's going to continue to kind of rain down on this market until we can get a resolution of that through an extension bounce or the VIX just bleeding back down and creating a bid back to the market or something like that. So this market is still guilty on the small time frame. Rallies are to be sold into on the small time frame. It's just that I wish that we could get a little more from those rallies to actually create a better potential short setup than what we've been getting. Or again, the opposite, some heavier selling, some more momentum selling, not this orderly selling, that could create an extension opportunity on the downside to potentially come in and get some stock. It's just been very orderly and very grindy, and it just kind of is what it is. So that's the SPYs. Let's see if we get any different picture from the Qs. Not really. The Qs are a little closer to kind of some extreme extension right now. And, we're down another 20 cents here after hours in the Qs. Netflix is maybe going to contribute to that as well. So if Netflix maybe continues to sell off, maybe we can get to that point. As of today's close, we're almost $9 extended away from the ADMA. But keep in mind tomorrow morning that ADMA will trade at a little bit of a lower price than it is at right now. So most likely you need tomorrow to see the Qs get down to like, I'm guessing we'll be able to assess better in the morning. But down to like 421 or maybe even a little bit below that to hit the point where you can start feeling confident. Maybe not confident, maybe that's not the right word. I'll say confident, where you can feel confident to look for the long setups for the oversold bounce, which again, you still need the setup. I wouldn't just be blindly catching a falling knife on the way down just because the market became $10 extended on a day 4 down or whatever. It's not enough evidence. You still want to have the executable setup on the small time frame where you're actually able to buy some things on the way up. So yeah, Q is getting a little bit closer to extreme extension. That'll be something we have to pay attention to in the morning, especially if we can get a gap down. And then the IWM, where's my IWM chart? The IWM also still not good. losing 193, it tried to show some degree of relative strength. I felt at certain points on the day. It was the same thing when we got into this 195. I was like, all right, we should correct. Same thing with the SPYs. We should correct, but then once we got this 1205 candle, after I think it was Bostic that was speaking, broke this market down lower, and then this thing was totally shot and even broke lows there. So yeah, the Russell's not looking good either. Working itself down into some more major support though, like this 190 area, which is about where the 200-day is. EDMA is at 197, so you would really need to see this IWM at that 200-day tomorrow to get extreme extension in the IWM. Again, the sell-off has been relatively orderly. Netflix maybe can help the Qs hit that last leg of momentum selling to get to that point, but it's still just one index. I do prefer, if I'm looking for that extension oversold bounce trade, that I've got confirmation on multiple indices, not just one of them being kind of extra weak, and then you run into that problem of, well, do I buy the relatively weak index because it's the one that's most extended, or do I buy the relatively strong index because it's relatively strong? Or, I would rather just have confirmation amongst all indices where all of them are hitting more extreme levels, and then I can potentially look for an oversold bounce by going after what is relatively strong. So even if the Qs get there tomorrow, it doesn't exactly give us continuity among our indexes, which would be preferable for the oversold bounce trade, but we can still take a look at things if we get to that point, and then again assess, is it better to try to do this in the Qs, or is it better to try to do this in something that's a little bit more relatively strong? So I think that is the big picture of the market. From a trading perspective today, I thought it was a pretty decent day. There were some good opportunities out there. There were some good trades that you guys called out that I think traders were making money in today. Some names that were in play through upgrades and downgrades, like ZM was a focus, ZS was a focus. I got very focused on trading this BPTH, another low floater that had some news this morning that was kind of creating a catalyst. 750,000 share float that traded 83 million shares today. It's really insane. Gave a great trade in the beginning of the day. Overall, I would say I did very well with this name personally. I don't think a ton of you guys were trading it, but I think a few of you did. And then I got totally screwed on this volatility halt gap down here, which caused me to definitely give back. I still finished positive in it, but I gave back way more P&L than I was intending. I had a final stop loss at the low of the day, which was $4.85. And then this was the second time it happened. It happened back here at 11:35 also. But some big seller just did like a big market sell, big bang market sell of however many shares, and especially in a name, this is the danger of trading a stock that's a little bit less liquid. It's crazy to me that the volume on this bar is only 243,000 shares, which again, it's still like a third of the float or whatever. But it was doing millions of shares every 5-minute bar earlier on in the day. But it seemed like someone market sold 100,000 shares of stock that whacked this thing down 60 cents or so pretty much instantly, which created a halt. But the halt happened with a low of $4.95. My stop loss is at $4.85. When they reopen it, they open it at $4.30. So they reopened it, 50. What did I just say those numbers were? 85, and the reopen was at 30. Yeah, they opened it 55 cents below, which that's kind of a disaster. That's only ever happened to me like 1 or 2 times ever in my trading where I got a halt and then gap past my stop loss. And what I did was I actually, knowing that it halted 5 cents away from my stop loss or 9 cents away from my stop loss, I actually canceled the stop because I didn't want it to do exactly what happened here, which is gap down past my stop loss, trigger it, and give me a boatload of slippage on the fact that there'd be no liquidity immediately after a halt, and I probably would have gotten. There's no way I would have got. I would be very surprised if I got the opening print of this $4.30 as my actual stop. I probably would have gotten 20 plus cents below that. So given that situation, I was like, all right, during the halt, let me cancel my stop here, and then I got to assess this thing when it actually opens on what I want to do. And what I ended up doing to try to just at this point manage and salvage the position was I bought more at $4. I bought more at $3.66 on the way up after this tail. Sold some into this up move. It never broke that low again. Worked the position a little bit. Made a few dollars back, but also, ended up still giving back significantly more P&L than I ever intended had I actually just been able to stop myself out at $4.85. I ended up liquidating all that position into the close 90 cents lower, which is obviously a lot in a $4 or $5 stock. 90 cents lower than where that original stop loss was. That sucks. That sucks. Is what it is. That thousands of dollars in P&L that just got kind of robbed from me, just because of that halt. But it's part of the business. It's part of trading. It always fascinates me a little bit sometimes when a situation like this occurs. And I remember, like, another example of that was when I was stuck short Kodak years ago, and that thing was just ripping higher, and it would have a volatility halt and then reopen and then hit another volatility halt within like literally 5 seconds of reopening, and just keep going up and up and up and up and up and up and up. I found it interesting on certain occasions like that where they actually have these volatility and halts in place to kind of protect the marketplace and to protect investors. But when you actually create the halt, it almost actually sometimes makes that situation even worse. And that certainly was that way when I was stuck short that Kodak years ago, and I couldn't get out. It would just halt, reopen for 5 seconds, be up huge in those 5 seconds, re-halt over and over and over again. And if they would have just let the thing actually trade, I could have managed my position and gotten out. And it would have been the same thing here. If they could have just let the position trade, my stop would have triggered. And yeah, it was moving down very rapidly, so I'm sure I would have gotten some slippage on it. But maybe I would have gotten slippage of 10 to 15 cents as opposed to, just being stuck in this thing $1 below the stop loss that I wanted to hit. Anyway, I'm just kind of talking about almost like an intellectual fascination with the market and market structure, more than anything else. But yeah, I mean that pretty much kind of covers the market. It pretty much covers my day. This BPTH took up a whole bunch of it. Snap was pretty good for some follow through off that news yesterday, which is when I've been trading. This Reddit is interesting. It seemed like this Reddit post IPO finally really capitulated with this increase in this volume and this heavy selling that it had down there. With this is more like a capitulatory panic volume, the very opposite of the orderly selling that we are seeing in the SPYs and the Qs right now. That led to a really nice snapback in this Reddit, despite the market still closing pretty weak. It still needs to break this descending channel to get back up. $42 is some resistance for Reddit. It was resistance on a couple of these trading sessions recently. It was resistance today. So see if Reddit can continue to bounce after that kind of more capitulatory-ish bottom that it had and retest to 42 with actual relative strength in it. The Chinese names kind of continue to do nothing and disappoint. The weakness in these is interesting, especially Alibaba. JD was able to bounce a little bit, but Baba was weak. This Baidu can't get out of its own way. Glad I followed my risk management on my risk management game plan on this thing when I was in it above 100 and stopped myself out just below 100 on that gap down a few days ago. That's why you got to manage your risk. This is another one where I was like, I really don't want to stop myself out of this Baidu. I believe in the idea. But guess what? I have ideas that are wrong all the time, and it's more important to follow the game plan that you actually create for yourself than listen to your thought process and your bias. So, I kind of have a strong bias that these Chinese names are cheap and undervalued, and that the company has the economy has the capacity to turn around. But despite that thesis, stop yourself out, follow your game plan. When you don't follow your game plan, especially on the risk management side, it's a great way to get yourself into a lot of trouble. And I know you'll always have that one time where you stop yourself out at the low and then it continues higher. I'm still upset and kicking myself about how I got stopped out of Tesla on this day. Yeah, this day right here. at 183 like 75. The high is 184.25. My price target on the short is $140. We're just about there now. $35 lower. I promise I would still be in that position following that game plan, but I got pushed out. But for every one time you get pushed out of a trade here, and I think I ended up break even on this thing, I'd be up huge in it if I didn't get pushed out by a very small amount on that day and I still had it at 150 and I'd still be looking for another $10. I'd be up huge in it. Every time that this happens, there are going to be much more often times where you stopped yourself out and the thing just continued to die and die and die and die because your idea was wrong. In this case, it's $6 lower. That $6 lower, because this chart looks like crap, could become $10 lower, could become $20 lower. Stop yourself out. Live to fight another day. Don't get into your head too much when that shakeout happens, because it happens to everybody. So with that thought process in mind, that's all I've got for you guys today. I am happy to answer any questions that anyone may have. So with that thought process in mind, let's see what's going on. I think the only thing I'm really seeing is from Austin. What determines the price when a halt reopens? The way that they reopen after a halt is kind of the same way, from my understanding, that they reopen the market and stocks in the market every day after the market itself actually closes. So the market makers have to balance the order book, or the specialist has to balance the order book. And there's also going to be an imbalance when a stock gets halted. There's a buy or sell imbalance, similar to pre-market, the market on open orders create a buy or sell imbalance. So what determines where a stock opens up in the morning is a combination of really, it's at the discretion to some degree of the market makers and the specialists. But what they're doing is they're trying to determine where it should open based on supply and demand that they're seeing pre-market in the order book versus the market on open imbalance. So it's the same thing in a halt. Just because the stock got halted doesn't mean that people don't have offers and bids and offers in it anymore. I certainly did, and people can. I don't know what order type that would actually be. I've never used market on open or market on close orders ever. I don't know what order type you would put in if the stock was halted and you would want to get like the opening price after the halt as much as possible. So it's definitely like a thing. But that balance is what causes the open. And you can see it too. You can see when the stock, and now the market is closed, but just typing up Coursera here as an example. Coursera into the close had a 12,700 share buy imbalance. You can see, if you have the data, what the net imbalance is when the stock was halted. And I look at that. So, I don't remember at all what it was in that halt for VPTH. But if I'm in a stock that's halted, or if I'm even looking at a stock that's halted for volatility hold or whatever, I'm always looking at the imbalance. Most of the time, if the imbalance is positive, it's going to open up above where they closed it, and if the imbalance is negative, it's going to open up down from where they closed it. So that's how they do that. From Carol, don't become biased. What levels are you looking at for the SPY to start looking for longs? Well, it's not just the levels, it's also the way that we get to the levels. That's what's really important to me. So, I know my levels, and they're relatively easy to figure out. Just look at your chart, right? So I think there's an important support zone at 497. You got this pivot low here at 493.50. You got this pivot low here at 490.71. So those are all, that's three potential support levels there. But again, it's not just the support level. It's also, I think, the way in which the stock gets to that support level. That's why, even 2 trading sessions ago, we were moderately extended to 503. That's important to me that we're moderately extended. That means to me that there's a slightly higher probability that the market could spend that day with bulls trying to defend that level and trying to give a bounce back. Obviously, that was met with sellers, and that turned into more of an equilibrium range day where you were holding 503. The sellers weren't strong enough to break it down, but the sellers spent the entire way eating at the buyers that were trying to come in and defend that 103. So then, by the time the next day comes around, the market is less oversold, it's less extended, and there's less buyers at 503 because so many of them got taken or hit, I should say, on the previous trading session. So yeah, I'm looking at 497, I'm looking at 493, I'm looking at 490, but I want to also see, how do we get down there, and what does the market look like when we get there? Are we continuing to have this more or less orderly sell-off, or do we begin to have momentum down into those levels? Because that's going to be a difference. Follow from Carol, and for a long swing, which one would you choose to buy from, the SPYs, the Qs, or the IWM? So right now, I don't have the answer to that question. I think it's also going to depend on what the market looks like when it hits the point where it's giving me a signal to actually take the buy. Where is the relative strength in the market? Where is the relative weakness? What's causing the selling? Is the market selling because there's been a return of those geopolitical concerns? Is the market selling because of interest rate concerns? Is it the opposite? Is the market beginning its bounce and giving me the buy signal because there's been a resolution to geopolitical concerns, or because there has been an easing in interest rates? So that's going to play a role in where the relative strength and relative weakness is at the time in which we're looking for longs. And also what the extension looks like, right? So it's like I was saying at the beginning of the meeting, the Qs are fairly close to getting extremely extended. If Netflix continues to be weak after hours into tomorrow morning, maybe they get there. But then I've got a little bit of a conundrum. Do I, if the Qs now are $10 extended, if I then get a small time frame signal to buy, broadly speaking, do I buy the Qs because they're the ones with the extreme extension? Or do I buy the IWM or the SPY even though they're not at that extreme extension point, because the reason they're not at that extreme extension point is because they're showing relative strength? And that's always a little bit of a tougher question, and that's why I would prefer to have continuity amongst the indices, them all telling me the same thing at the same time, and that makes it a little bit easier, and then I can just focus on what's acting relatively strong or relatively weak in the moment. So again, I think it's too early to make some of those decisions on where do we start buying and what do we start buying. It really depends more on the circumstance of how we get to the trigger that tells you to actually buy, and what the information is that's around that trigger as far as fundamental news and as far as the technicals. No problem. From Alberto, a trade like BYON, looking for an RDR, how do you properly manage? I know you mentioned 26 as a conservative target for a rebound. Do you go in and out buying weakness and selling strength, keeping a core, or you have a position and leave it alone? Sure, so I don't know if you're asking me very specifically about my position, or if you're asking me more broadly about like what the proper way is to trade this when you're looking for the RDR. The RDR got kind of canceled with yesterday's trading session, because yesterday's trading session it traded higher and never broke the previous day's low. So I know there's still a lot of extension here, but it kind of resets the countdown a little bit on that trade. It makes it more difficult to some degree, but you could still be looking, because there is enough extension for a long back through the low of maybe 2 trading sessions ago. But broadly speaking, very simply speaking, the right way to trade an RDR is to buy it back through the level with the stop loss at lows. So again, a little bit tricky, because yesterday kind of created a reset up of the countdown of multiple red days in a row. Yesterday was technically not a red day. The stock was positive yesterday. Even if it closed below where it opened, it was still positive on the day. So again, that's a reset. You're not day 5 down now, though. You always need to take the circumstance into account, and the circumstance is that even though yesterday was green, it closed very weak, and this thing's been selling so hard that there's still a ton of extension there. So technically, the right way to buy it, you would need yesterday to have closed below the previous day's low, and then you'd be buying it back through yesterday's low. So technically, this wasn't really an RDR in the same way today, but I don't mind the idea of taking some, I don't know, taking some leeway with yourself on the definition of that trade because the stock is so extended to the downside of the daily chart, or maybe you just try to buy back through the low from 2 days ago. So let's say that's what you did. Let's say that stock opens up below the low from 2 days ago, which is just fine. The low from 2 days ago is 23.44, and you buy it through 23.44 versus the opening low. You've got approximately 20 cents worth of risk. Hopefully this is enough of a move to get your risk covered. 2 bars later, did it break 2 bars later? 25 cents. What was this low? 20. No, it held to the penny. Held to the penny. You'd be in this all day. Your stop loss of 24 cents holds. 2 equal lows here. It holds until the end of the day. So you get this nice bounce. You're hoping you get continuation. It's looking good up here, and then the market comes along and ruins everything again, and we get this very weak close where it closes on lows. So the right way to trade it is you're in this thing pretty much all day, and you sold some on the way up, and then you get stopped out, and in a worst case scenario, you are break even on the trade if you're being very greedy. In reality, because you only had 20 cents worth of risk on the entry the way that we described it, and you caught $1 worth of reward, you probably should even be positive in this thing as it's failing and stopping you out. So yeah, that's the right way to trade it. For myself, excuse me, for myself, I have a little bit of a different strategy and a little bit of a different approach with what's going on. I've definitely given back a ton of P&L, but this is like a continuation of a swing trade for me that I had been in going all the way back to October of last year when like this base was created and then this base broke out. So I made a lot of money into this initial up move. I think I liquidated the position somewhere up here. I don't exactly remember where. I think I started rebuilding back into the position on the way down. I sold it on the way up. I think I fully liquidated my position by the low 30s. And then I started nibbling back in again as high as, I think like $32 on this thing. So $9 out of the money on some of my position that I started to rebuild back into at 32. But with the way that I trade, if people who know me well enough are here, or if you know me well enough, you know that I would be in this still, as long as my P&L is still positive in it. And if you don't know me well enough, well, I guess you do now. I'm a very greedy trader. I love to risk sometimes exorbitant amounts of money that I've already made with the potential to make more. So, my thought process with the kind of the strategy and how I work certain positions and how I do this cash flow trading that we've talked about in previous afternoon meetings, where I work a lot of ranges while I wait for a bigger picture to kind of play out, is I'm taking all the money that I've basically made here and utilizing it to be able to trade this move here. And if I hit the point where I've given everything back and I'm back to zero, then I stop myself out basically. So the way that I trade, I find myself not wanting to put on risk a lot initially, but I find myself when I have, and of course you have to put risk on initially, you never put on a trade, but when I have very large profits in something, I tend to be willing to give back oftentimes every penny that I've ever made for the potential to make significantly more. And what happens is sometimes I give everything back. sometimes I give everything back, 6 figures back in a name, and that sucks. But on many other times when I have that much of a profit cushion, I can just kind of continue to be able to build off of it and build off of it and build off of it. And yes, to answer your question, Carol, I track it in a series of spreadsheets that I have that I update every evening as soon as the afternoon meeting is over. Thanks for the questions, guys. Popping over to the YouTube. What do you think about being short gold post the weekend Middle East news? Let's take a look at what gold looked like at the close today, because I thought that the gold chart looked great this morning. I still think the gold chart looks great. The gold chart's bull flagging. I think this thing looks great. I think that it's very dangerous to be short this thing right now. There's a lot of upside momentum after this thing had like a decade-long breakout, or even longer than that, to these new all-time highs. I'd be very careful with that trade. Because it seems like the market is already acting as if there have been, I don't want to say a full resolution of the Middle East conflict, but a little bit of a dying down of the tensions between the Israel-Iran situation that had hit us down a little bit, and this gold's still bull flagging and holding up. I think that there's multiple factors at play there. Silver's still in its flag also. These flags could obviously fail, but to me that seems like a very difficult trade. From Gabriel, I tried the RDR today around 9:50 after the 9:45 candle close. I'm not sure what on the IWM. All right, so you tried the RDR today at 9:50 after the 9:45 candle closed. Okay, I like it. Do you think the RDR trade I could put a stop at around half the day move in order to give back more profit? So if the RDR comes into play where you are then in a confirmed uptrend on a small time frame, considering this is a day trade, you could trail on that small time frame. That's no problem. So you could, that's pretty much what happened here. We went into, on the very small time frame, a pattern of higher highs and higher lows. You could have raised your stop to the 1020 bar. You could have, depends how tight you wanted to keep it, you could have raised your stop to the 1040 bar. You could have raised your stop to this consolidation low. I think that all would have been an appropriate trailing stop on the way up if you wanted to keep it tight. It really depends on what you think based on the big picture. If you think that this is just a quick oversold bounce in a weak market that's destined for failure, it makes more sense to keep it tight. If you think that this market has the capacity to give you a bounce back to 197 to 200, then you probably want to keep it a little bit looser because you don't want to get shaken out on this pullback. Let's say we had this pullback here to about noonish that creates a 15-minute chart higher low that gives us new highs and gives us continuation. And then if we end up working our way to $198+ off that oversold bounce, then you will be upset and kicking yourself that you trilled it that tight. So it depends on the game plan that you established for yourself prior to getting into the trade. And the game plan that you established for yourself prior to getting into the trade should be based on your expectations of what the market can do based on where the market is actually trading. So I would be 100% fine with you trailing this tighter. I would also be 100% fine with you giving it all the way back to your original stop loss because you're looking for that bigger picture. Also, do you think the RDR can still be tried tomorrow? Yes. I have 188, 190, 192 as some levels for possible bounces. Or better wait for another sell-off day tomorrow. I think it could still be tried tomorrow. It'd be nice again if we could get more of that extreme extension because that would be an extra layer of probability on you trying to do the counter trend stuff. But it's also very possible that the market gives a real correction or even a bottom without ever hitting extreme extension. So, you know, it's just layers of probability. It'd be better if we got the extreme extension. We don't necessarily have to, and you could still be looking for the RDR tomorrow. Laughing at your last comment there, Gabriel. All right, gang. Well, it's 5 of 5. Does anyone have anything else? Otherwise, I'll wrap it up. I got to catch up on some sleep. The only problem with these time zones out here is on the very rare occasion I go out at night, getting back. I got home at like midnight last night, but that's basically 2 a.m. Eastern. It's like the latest I've been out on a working night in a long time. It was cool to go see Breaking Benjamin. I'm not sure if anybody else is a fan. It was a really good show. But all right, I'm not seeing any other questions or comments, so I'll wrap it up. Have a great night, everybody. See you tomorrow.